Hey guys, how are you? This is Eric Bramlett with Bramlett Partners. Today is Monday, April 14th, and we are here to discuss the March 2025 Austin Metro real estate statistics. There's a lot of movement in the real estate market and a lot of movement in the broader economy. I like to remind everyone that real estate is hyper-local and hyper-situational. Your situation is likely very different than others. So if you would like to discuss your specific situation, please reach out to us and we would love to help you. This goes for homeowners, goes for buyers and sellers. It also goes for other industry professionals. With all of that said, let's go ahead and jump right into the statistics. Running through these statistics, total sales declined by 10.5% versus 2024. Total contract and pendings declined only by 2.5%, and we'll discuss why we care more about that than we do the total sales. New listings ticked up 9.3%, which drove total active listings up 16.5%. This means that we're seeing an environment where demand seems to be decreasing a bit and supply is increasing a bit. This is favorable for buyers, and it means that sellers want to be very mindful of their strategy and their pricing. Withdrawn and expires ticked up by 14.1%. Good news for everyone is that pricing does remain stable. You're going to see average price up just slightly, median price down just slightly, and price per square foot on average and median both down just slightly. It is fair to say that pricing has remained stable for the past 18 months, and that does continue. Average days on market for sellers averages now 95 days on market. So when you do list a property, those are the expectations you should have. And months of inventory have increased to 5.8 months of inventory. That is still considered a balanced market, but it leans pretty heavily towards buyers. This is what you're going to hear. This is what you will likely see in the news more than anything, and that are the total sales numbers decreased by 10.5% in the month of March. What I'd like to point out is that the total under contract and pending units declined only by 2.5%. We generally focus more on pending units than we do total sales because pending units will tell you what the total sales will be in the next 30 to 60 days. We were not surprised by the decline in total sales in the month of March because we saw that coming in the month of February. Leads me to leading versus lagging indicators is an image that we looked at in an internal meeting about 2 weeks ago. And we compare lagging indicators as though you're driving by looking at your rearview mirror, while leading indicators shows you the road ahead. Total sales and average price are both lagging indicators. It doesn't mean that these should be ignored. It only means that you want to look at leading indicators to see the direction the market is going. Buyers and sellers rightfully care the most about median and average sold price. Is it a safe time to buy? Is it a safe time to sell? The answer has been yes. It's a safe time to buy and a safe time to sell for the past 18 months or so. It doesn't really get much flatter than the trend line on average and median sold price. You can see that average price has ticked up just very slightly from March of 2024, and median price has ticked down just very slightly from March of 2024. The trend line on both is very, very flat. Pending units by month. So the first quarter, we started out pretty sluggish, and you can see that there's a relatively decent delta between 2024 and 2025. March of 2025, the news became better. You can see that there's only a 2.5% decline, but the trend line still follows the normal seasonal pattern. What that means is that you will likely see the most buyer demand in the spring and early summer months. We will likely see April follow this trend line as well. We'll see the demand remain strong into the early summer months, and then it will begin declining as the summer heats up, and then it declines more as we get into the school year. New listings, we have seen more new listings hit the market this year than we did in 2024. This shows us a really early sign of demand. If sellers are entering the market, that means that they want to move. Those sellers do become buyers. But we have to see this year, will the sellers meet the buyers where they need to be in order to turn these into sales? The net result of fewer under contract units and more listings hitting the market is that we have more supply, less demand. That is favorable for buyers, and it means that sellers do need to be very mindful of their pricing and their marketing strategies. Total volume in the month of March declined by 8%. That brings the year to date to minus 7.6% in total volume. This is also a measure of demand. It's the dollar volume that's trading on the market. It's very impactful to real estate agents as well because this is what you call the commission pie. So the commission pie is shrinking. And if you are a real estate professional, it's important for you to look at your business strategies. It's as important for you to look at that as it is for your sellers to look at their pricing strategy. Leading indicators. Consumer confidence has declined in the month of February, and then it declined again in the month of March. Consumers like to see stability, And it's easy to understand that the news cycle has been anything but stable. So we've seen consumer confidence decrease. For the past 2 months, we've also seen mortgage rates go down. But as of today, mortgage rates have ticked back up above 7%. When we look at that as a trend, you can see that we started the year at 7.07%, and we actually, as of this morning, we're at 7.07%. Whenever we saw the improvement in the market in March, that was likely due to interest rates declining some. We saw for about a month, it was 6.75%. Now that it's ticked back up above 7%, we do expect buyer demand to follow suit. We do expect to see more buyers sit on the fence and wait to see what will happen with interest rates. It's important to note that there is nothing that we can do about market conditions. We can only react to market conditions. The question for business planning is obviously which direction is the market going. But in terms of your success as a buyer or a seller, or your success as a real estate professional, the question needs to be, what can I do to succeed in any market condition? That's what we're here for, right? That's what we're here to help buyers and sellers with. That's what we're here to help real estate professionals with. So looping it back right around, if we can help you with your specific situation, please reach out to us. You can drop a comment in the video, or you can email us or hit us up on the website. I would love to talk with you. Our agents would love to talk with you. This market is uncertain right now, right? There's a lot of uncertainty in all markets in general. That's the stock market, that's bond market, it's the real estate market. We can help you sort of cut through the noise, help you focus on what's important to you, and we can help you develop a strategy that will help you succeed. So please reach out. Again, I'm Eric Bramlett with Bramlett Partners. Thank you very much for watching and listening today, and I hope everyone has an amazing week.